Hey guys, Be Twice here. Today is Sunday, August 15th. I hope everybody is having a really good weekend. Today we're going to be taking a look at Disney. We're going to look at the macro count and technical analysis, and then we're going to jump into the micro to try to figure out where this thing is going. Obviously, a lot of people saw Disney this week, had a really good blowout earnings, um, was up like 5 or 6% after hours to about 190 a share ultimately for the next day on Friday, while the market was kind of flat, just to completely give back just about all of the gains by the end of day. So, very underwhelming, poor performance. A lot of people were expecting 190 plus, maybe even like 195 on Friday based upon the report, and ultimately it bled all the way back down to like 180. So not very good. So where is this thing going? Okay, so looking at Disney, we're looking to finish off a cycle wave three, and I have our price target somewhere between 220 to 230 for the cycle wave three, and I would be expecting to see that kind of move um, sometime by maybe early 2022, if not even earlier than that. It just depends on the state of the market. I do feel good about Disney long term. The Disney Plus subscriber growth was there. The one thing negatively weighing on Disney right now is COVID, right? So if the parks have to get shut back down, we all know what happened to Disney last year when that happened. It went from about 150 a share down to 80. So a really, really steep decline for Disney based upon a lot of their revenue coming from the parks itself. So now looking at the macro version, I've drawn some. I went back on the monthly all-time chart, and I drew some trend lines going back years. So I drew this one in red because this is a trend line that it was serving as resistance, and then ultimately it served as support two times, and this is where we found our wave four bottom. Um, this was an uptrend line from years ago that obviously we kind of held that as well. So it kind of we kind of touched both these lines crossing and kind of held support on both of the lines. And then it looks like we're respecting this trend line now. And then this is just another trend line I drawn that we actually caught the COVID bounce off of. So if something was to catastrophically happen in the market, this may be an area where unfortunately Disney could go to. So with that being said, let's look at this. So we've popped up for a 1, 2, 3, and we've pulled back for a 4. We had a WXY correction. We were kind of flagging, and so we've broken out of that flag. So that's really bullish. Obviously, we broke out of this flag. We've tried to break out a couple times, and ultimately we sold off. So now that we've looked at this, let's jump into the micro version. Okay, so now we're going to be looking at the 2 hour chart. So we just kind of, when you jump into the 2 hour chart, you just get more detail on the candles versus the weekly time frame or the daily time frame. A lot of times when I do the macro look, I try to look at it the weekly just so we can get a bigger picture of is it bearish, is it bullish, and then where it could potentially be going because it's easier to see the total price targets on that bigger chart to try to make sense of how we got here. So back here is where we have the cross of these trend lines. We had our wave, our Y bottom, which was our wave four bottom. And what have we seen since then? So we popped it for a 1, we pulled back for a 2. So at one point in time, I was thinking that we were having a 1, 2, 1, 2 structure, and then we were going to rally. Now, even though that's entirely possible still, is that we've had this 1, 2, 1, 2, and possibly popped it for another 1, pulling back for another 2, that could lead to a massive rally. I think at this point in time, it's more likely that this was actually a 1, 2, 3, 4, 5, and that we're going to be seeing this pullback. What we should see if it was a 1, 2, 3, 4, 5 for a higher degree one, we should still see a pop to the upside that's going to lead to another sell-off, and that's going to take us down to our wave two bottom. So if this count is correct, and we kind of have this somewhat of a leading diagonal structure, then we could be seeing Disney go all the way back down to 177 or even 175 before it finds bottom. Ultimately, if it does get there, that's going to be a great dip buy spot because from there, we're going to rally up for our wave 3 to 210, have a slight pullback, and then ultimately go up to this 220 range. So that's really a look at the micro level. So if either way, whether we have ourselves a 1, 2, 3, 4, 5, or if we have this 1, 2, 1, 2 nesting, we still will see some more downside before ultimately rallying up. So, unfortunate fate for Disney. I was kind of hoping more after I saw the after hours action on the earnings report. But that sharp sell off, is a huge clue that it likely is going to go lower before we see a rally out of this one. So, all right, guys, if you like these videos, go ahead, hit a like and subscribe.